Now, historically, I've always got Geoff on my TV show, and his assistant has always asked me, what kind of questions do you want to ask Geoff? And I would give a list and proceed never to ask those questions. So Geoff is quite used to me doing that. And by the way, you gave me those questions, but I've lost them.
But hey, I've got the answer.
Okay.
It's in here.
That's right.
And actually, I promise I will pay on the way out.
Don't be
I asked
silly.
the people if I can use it as a prop, but Pete's already signed it for me, so that's a good way of making me pay
for it.
$24.95.
All right, okay. The value for people in the audience to hear from someone like you is to get inside your head and learn from you the stuff that you learned along the way, because obviously you weren't as smart when you started as you are now. Is that a fair call, or has alcohol changed all that?
I think I'm probably exactly the same, but it's experience.
Yeah.
It's what you've learned, isn't it? And I mean, the funny thing is, only because when you're saying, like, what have you learned over time?
Yeah.
I mean, one of the reasons I'm here is my father, he was a doctor, but he was fascinated with the stock market.
Yeah.
And when I was a teenager, I'd come home and he was never home, but when he'd get home, he'd sit in a chair and he'd be reading the paper and looking at all these numbers. And I was thinking, what are they? And one day I said, what is that? He said, the stock market. So anyway, I had a look down the list, and there was a company called Cox Brothers. It was a Melbourne retailer, was trading for a cent. And then a couple of months later, I saw half a cent, and I thought, if I buy it half a cent, it goes back to a cent, I'll make 100% of my money. Then the next time I looked, I was looking down, I said, Dad, I can't find the name. Yeah. Had it gone under. And I've always been a bit suspicious of retail since, but we'll come back to that.
Yeah. So why don't you tell us the part of your history, your pre-history before becoming a fund manager, that explained why you ended up being a fund manager?
Oh, that's a deep question, isn't it?
Yeah.
Well, I mean, there was a lot of luck around
it. Were you a broker beforehand, or?
In terms of, my first job was actually in funds management. Okay. Yeah, in 1980 at Scottish Amicable in Melbourne. And it was really, I did science at university. Actually, I went to university with one of the ladies. Her dad was a very successful stockbroker in Melbourne, and I knew very little about it. Probably the first, because Dad was interested in the market, the first share I bought, luckily I didn't buy Cox Brothers, but sort of in my late teens, I think my dad was encouraging me to buy something. So again, I looked down the list, and this was, Malcolm Fraser was in, it was when we were going to have a resources boom, which we actually never had back then. And I was looking down the list, and there was a company called Timor Oil and Gas. And similar philosophy, it was trading at 10 cents. So Dad lent me $1,000. He encouraged me to buy some.
What interest rate? What interest rate?
Yeah, free.
Free?
Yeah. Probably the interest rates, most of the interest rates in the world now.
Yeah.
Anyway, I bought the shares. They went up to 12 cents. I sold half. I didn't know anything about them. They happened to be drilling a well. They went to 32 cents. I sold the other half. And I thought, how easy is this? It's probably like winning on the first race and then thinking it's an easy game. Yeah. But so that sort of gave me a little bit of interest. And I thought it was just like the races, in those days. You buy a stock and you hope it goes up. But when I started in funds management, then I realised it actually isn't that. And I think you talk about it. When you buy a share, you become a part owner of that business. And so it's amazing. When we buy a house or an apartment, we spend an enormous amount of time doing research and trying to work out what it's worth. Yeah. But I think a lot of people, they buy a share and they don't do the same amount of work and research. No. And so, in theory, to me, you try to put yourself in a position where, do I want to be a part owner of this business? Do I think it's a good business? And then I'll buy a share in it. So to me, that's sort of the mentality you've got to have.
Okay, so when did you work out? I always remember you said to me that part of the process that you and your people do is you actually visit a company that
Yes.
you're going to invest in, and you talk to the management, and
Yes.
you effectively kick the tyres.
Yes.
And what it rung, when I heard you say that, it rung true with, in 1976 when I was in London, the Financial Times conducted a competition between fund managers, and there was a pharmacist from Luton who actually won the competition. He beat all the fund managers.
Right.
And when he was interviewed and asked why he thought he'd won, he said, well, whenever I bought a company, I would go and stand outside the factory and talk to the workers when they're coming out and ask, what's your company like? You know, if I were a retailer, I'd go into the retail store and talk to the staff. He says, I figured if they were happy, the productivity would probably be there in a company like that. And that was kicking the tyres. And that's what you do when you add a new company to one of your funds.
Yes. I mean, we believe, well, effectively, say like yourself, or when people give you money to manage on their behalf, then they do it because they trust you and they believe you'll do a good job. So when you buy a share in a company, that's exactly the same. So you really, whoever the managing director is and his team, you have to believe he will do a good job with your money. And to me, you do as much research as you can to work that out and understand that. And we're in a slightly better position than the bulk of the investors here, because we get access to sit down with the managing directors of companies. And to me, it's you tend to try to ask them the same question and a number of times and see if you get the same answers. You observe their body language. I've probably been lied to really successfully once. At one stage, was
it Eddie Groves?
No. Eddie is one story. Yeah,
Eddie lied to him?
No, Eddie didn't. No, he just changed his story.
He changed his story?
Yeah, and that was about...
And you and Matt Kidman walked away and said, hang on, last time we heard him, he said this, and now he's saying that.
Yeah, he was saying it's all about his profitability, is all about how many people, the occupancy of the child centres.
In Australia?
In Australia. And then Matthew was at one of the Morgan's conferences in Queensland, asked him exactly the same question. As this is the big driver, and he said, no, that's not the big driver. He sort of changed his story. And so then when they change stories, you start...
And he was wearing Cuban boots, wasn't he? Texas boots. And that was another thing that I think might have spooked Matt as well.
That's right. I remember when I first met him, he was wearing, he's coming down to raise money, and he was dressed, because I think he was a milkman.
He was a milkman.
Yeah, he was dressed as a milkman initially. But anyway. But no, it's just trying to find... It's like, say, the new managing director of AMP. You meet him and you've got to have a view on him.
What's your view on him?
I actually think he's got a chance.
Yeah?
Yeah, I don't mind him. Yeah. I've met him.
Did he give you a kiss on both sides of the cheek? He's Italian.
Exactly, yeah. Like, he's very... to me, and it's interesting, one of your questions, you ask... anyway,
if I can find them,
if we get back to the question, but I notice in here, one of the quotes... it's a Jerry Harvey quote about Pete as the most honest and reliable finance guy. And see, to me, it's honesty. And you're trying to... you're obviously reading the people when you talk to them. When you ask them questions, you see how they act. You say, look, how things are going, profitability, or cross your arms. But with the new guy at AMP, I think he's incredibly honest.
Which is refreshing for the financial services industry, isn't it?
Correct.
Yeah.
Correct.
Yeah.
No, it is.
One thing I should say to Jerry's quote there, he actually said, we had to change it a little bit, and I changed it without permission, because I think he said Pete is the most honest or something journalist in the country, but he said up against no opposition. Which is typically Jerry Harvey. Yeah. All right, so let's get down to a couple of interesting questions you've asked me over the years, or answers you've given me over the years. I asked you only about 6 months ago if your daughter came to you and said, Dad, which one of your funds would you invest in? You actually said not WAM Capital. Do you remember saying that?
Oh yeah, it would be the same, because...
I've told other people who are in WAM, I said, what?
No.
But you're being honest, I know you're being honest.
In terms of listed investment companies, is the value of them is the assets, the net tangible assets, and then there's a share price, and sometimes the share price trades below the net tangible assets, and if you're lucky, the share price trades above. And with WAM Capital, the share price is above NTA, and like what we're trying to do is we're trying to buy $1 of assets for 80 cents, and
that's been your philosophy of life.
Yeah, that's right. Well, it does irritate my wife sometimes when we're going overseas and I'm trying to get a good deal on this, and she said, "Can't you just book it?"
And do you say that's the difference between you and me?
I said, "Well, I
wouldn't try that."
No, I worked out. I said, "Look, that is my life. I'm always trying to buy." Well, of course, I prefer to buy $1 for 50 cents.
Yeah.
But at least 80 cents. So, in theory, which ones would I buy? Say for my daughter now, Amelia, the ones trading at the biggest discounts, and that's the.
Name them.
Well, WAM Global is the biggest discount, and that's what happens is when you float a new LIC, you do get a bit of flow back, from your shareholders. People put their money in, new company. Is it going to perform well? Isn't it? They get shaken out a little bit by the market. So to me, it's got to work through that. Just started paying a dividend. It's about I think it's a 14% discount to the assets. So I just go down, look at ours, and the biggest discount I'd buy.
But
and then WAM Capital's at a premium, so I wouldn't buy that.
Yeah, but some companies do really well, and the discount prevails.
Yes.
And despite the fact that it does really well.
Yeah.
How do you close that? Because over your time, you've closed that gap.
Yeah.
And
a couple of times.
And one of it is by coming here and talking about this fund, like you just did then.
Yeah.
You try and help you guys all close the gap for him.
Yeah.
But how else? Have you seen other ones that you've bought into and you thought they were fantastic, and they just because the market just never picked up and just never closed it?
Yeah. Well, I mean, what are the drivers for the premiums and discounts? To me, it's performance. It's also yield. It's treating shareholders with respect, and you think it's so basic, but there are, not many companies, listed investment companies, have done them recently, but go back a few years where they've done placements at discounts to NTA, which is negative for the current shareholders. So that's sort of the board being intelligent, and then the fourth part is really have a very strong shareholder engagement and communication and marketing strategy. I mean, that's why when you said to come here, hey, great, because there are a number of our shareholders here, and with a bit of luck, there'll be some more. And when I talk to other, people that run, listed entities that trade at, discounts, I say it actually is very simple. And actually, what sport did you used to play at school?
Well, I was swimming captain.
Swimming.
Playing rugby league.
League, okay, yeah. And I'm sure...
And rugby as well.
Yeah, okay, so I'm
and
sure...
And water polo.
Okay, well, any of those three. But I'm sure you're... say it's the grand final. I'm sure your coach said, say rugby league. Okay, all you've got to do is take the ball from the kick-off, keep it in your hands, pass it to the other guys, and put the ball over the end of the line and get a try. Yeah. Just don't give it to the other person, and then you'll win. Just do the simple things. And with listed investment companies... By the way,
I was so good, I never needed that on grand final day, but still, it's a good idea. For some of my dumb sidekicks, it was a good idea. Yeah.
So with listed investment companies, effectively, you need to communicate with all your shareholders. So engage with all your shareholders so they know what you're doing. And if they know what you're doing, then they're less likely to sell. Effectively, stop everyone from selling and get some people to buy. And then in theory, they trade at NTA or a premium. That's it. Now, it's very simple saying it, like your rugby coach would have said. It's a lot harder doing it. And like with WAM Global, which is a newer one of ours, trading at a discount. So we've just come out with a result. The performance has been good. With Katrina, started a dividend, and now what we'll do is over the next 3 months, someone from our organisation will ring everyone that we've got a phone number for. So engage with them. Yeah. Like I do the top 20, 30. Kate, the CEO's doing the next 50, and then
it's a very rational approach.
Yeah, and communicate with them, and you just got to...
Because they are co-owners, aren't they?
Of the business, exactly. Yeah. And to me, the funny thing is when you Kate was saying, she's our CEO, she's speaking to someone yesterday, and answered the phone and said, look, Kate from, I'm just, Wilson Asset Management is ringing WAM Global. And he's quite gruff initially.
Yeah, what's happening to you?
Well, why are you ringing? Yeah. And he said, no one has ever rung me from a public company. Yeah. And it's just engaging.
Good point.
Yeah. And they might have questions, and then you can answer their questions.
Okay. Let's because we are ultimately running out of time, and these people would love me to get insights from you. Like, for example, are you worried about the inverted yield curve? Have you been running around the office all week saying, inverted yield curve?
I suppose, am I worried? Yes.
He's always worried.
Yeah, well, I tend to...
he's worried himself to enormous wealth.
Yeah. Well, it's like plan for the worst and hope for the best. And we all know, and 3 years ago, I would have told you the same thing. It has been a very long bull market. Yeah. And in the US, it's the longest ever. And I mean, the fascinating thing is, you talk to other... I was at a board meeting, John Abernathy, another very successful fund manager, and I said, John, what do you think? And he said, I got no idea. Any fund manager that says they do is lying. Yeah. It is brave new world. We've never been in this situation before. Yeah. What worries me? Yeah, we've had the drop in interest. We've had the interest rates going to effectively zero or heading to zero. So that enormous liquidity pumped into the system. We've had PEs expand because of that. The fact that the 10-year bond or overseas, the 30-year bonds or the 50-year bonds in Europe are negative or say zero at best. What is that telling us? Is that telling us that there's not going to be growth for a very long time? I know we're getting the valuation effect. What happens on the other side? Is the PE contraction, which because there's not much growth. That's what worries me. And the fact that the bull market's been so long, the fact that the yield curve's inverted, last 6 times it inverted, 6 recessions. And I think they were 12 to 18 months after. The odds are we are going to have a recession in the next couple of years. The theorists say, well, the last 6 times there was inflation. If there's no inflation, you won't necessarily get the recession.
So in all those cases, Geoff, you had rising interest rates that also hurt the stock market and hurt economies. It created the recession, didn't it?
Correct. So the bizarre thing now is with modern monetary theory and all that, do we get QE4? Do we get QE5? Like, who knows? It is a brave new world. I tend to believe in cycles. I believe that after bull markets you have bear markets. The good thing is bear markets only last for a short time.
Yeah, that's right. That's right.
Yes, they average 18 months, but they're incredibly painful. So I'd be holding it.
How much cash are you holding?
Oh, we're only about 25, 26.
So he's not scared. If you're scared, what's the biggest you've ever held?
Oh well, we were 52% cash in December. But see, the tough thing is, we're very close to the market, so we keep playing the game. So in terms of what we've done is our holdings now are a lot more liquid than they were in December. We went back into the market. We were down to, I think, 15% cash, February, March, when the Fed did the U-turn.
Yeah.
But yeah, like things are. I know you're a bull, and you
not always.
and you tend to be right.
Yeah, for 28 years.
I know exactly, but yeah. Anyway, I'm very nervous.
Okay, fair enough. Yeah. Look, there's going to be a time when we're going to have to be really scared.
I'll be right 1 out of 10.
Yeah,
you're right 9 out of 10.
Yeah, I'm marginally scared. That's all.
Yes,
but not very at this point in time. And look, if Donald Trump was more readable, I would be less scared as well. But he's hard to read.
Yeah.
All right. What's the best company that you've bought recently that you really like? Because everyone's
look, there's a couple of stocks, and it's funny. I was talking about Cox Brothers and retail, and we can go through all the retailers that went under. There's a lot of them. A stock that we own a reasonable percentage of is Myer, and it's a leverage play. We know retail is tough. The economy in Australia is still very tough. It hasn't really picked up much with the lower recent interest rate cuts. But what John King, the CEO, is doing, he's taking significant costs out. So I'm pretty sure, my gut feel is this earnings result will be a positive surprise.
Next week? Next week, is it?
No, it's next month. So yeah, it's off the June-December cycle.
Okay.
Myer, I think
That's
I think you could probably double your money.
Yeah.
It might be that's a bit, 50 cents to $1 might be a bit too much.
Yeah,
But
and by the way,
80 cents
anything he says here is not financial advice because
general advice.
Yeah, we don't know your personal circumstances, right?
And this is a result of finding it hard to find value in the market. So the stocks I'm giving you tend to be, turnarounds, and the other one is Eclipse. New management. We just went substantial last night. We've got a little over.
Explain what Eclipse does. A lot of companies.
Novated leases.
Like Macmillan Shakespeare.
Very similar to Macmillan.
Yeah.
Exactly. And new MD, cleaning up the business, significantly reduced the debt. It's a turnaround. Trading, $1.40-ish, we think it could easily be over $2.
If, looking at the Australian setting,
yes.
Do you think that this, economy of ours is starting to improve?
Let's hope.
Do you think so, though?
The thing is, it should. Are we seeing signs of it from the companies we speak to? No. And but normally,
your small cap companies.
Yeah, mids and smalls.
Yeah.
But even the guys that do WAM leaders, they're not. And in theory, I suppose you have a couple of interest rate cuts. I was always taught, interest rate cuts. At 6 months down the track, you start seeing the benefit. We've had the 2 interest rate cuts, and we've had the tax cut.
Yeah.
So you would hope that things are improving. Like, people are talking about this period's been tough, and thinking that things are improving. We might have a reasonable last quarter, but we haven't seen that yet. I mean, that's what the hope is. And the interesting thing is, globally, everything is going the other way. Everything's slowing down.
One last question. Did you at any stage get a filthy phone call from Bill Shorten or Chris Bowen? Remember, he led the charge on the franking credits.
No, well, the answer is no.
What? No one let your tyres down?
No, but you'd be happy to know I was at, and actually, Mike from Kitchen by Mike?
Yes.
I met him when I was on your show.
Yes, right.
So I go to his restaurant all the time now.
Yeah. That's in
Spring Street.
Yep.
Yeah. Anyway, I was in there. Albo was in the line. This is 2 weeks ago. I was at the back. He was at the front. I waited for him to get his meal.
Did he come and hug you?
No, well, because he
loves you. Yeah.
He should. Yeah. But he was just paying. I thought, I can't help myself.
Yeah.
So I went up and said, "Oh, look, I'm Geoff Wilson.
Yeah.
Good to meet you. If you'd like to talk about franking credits, please feel free to give me a call." And he looked straight ahead, and just out of the side of his mouth, he said, "No, thanks."
You at Waikato will never touch franking credits again. Ladies and gentlemen, please thank Geoff Wilson.
Thanks, Pete. Thank you.
Are you going to stay?